Okay, so let me be Captain Obvious for a moment. Tesla stock has had a rough couple of days. But believe me when I say this, Tesla's Nvidia moment is coming. That aha moment that we have been waiting for, it's not here yet. It's not at all reflected in Tesla stock. In fact, I believe by the end of this year, that moment is coming. And in 2025, this could lead to almost a 5x in Tesla stock. And I know this sounds so crazy to even think about this, but your position in Tesla could 5x by the end of next year. And I'll explain exactly why that is and everything you need to know. We will also go over this correction that has started in markets and what some firms on Wall Street are saying. I have about a 5-minute long clip from CNBC and Joe Terranova, someone I respect highly, that has been very, very bullish in the last 6 months, 12 months, 24 months, and now he's starting to call for a correction. He manages a fund specifically that is all about momentum, so I think his perspective is valuable. And last but not least, we will also talk about Tesla's upcoming earnings report and my expectations for Tesla stock before and after that earnings, in regards to also what's happening in our markets, because that is impacting Tesla. So I'm going to save the best for last. We're going to talk about Tesla stock potentially 5xing by the end of next year towards the end of this video. So if you don't care about anything else, you don't care about the near term, what's going to happen with Tesla around earnings or this market correction, just skip to the end of this video and hear that at least. I highly encourage you at least hear that. So first and foremost, there's a lot of political uncertainty going on here, and Biden potentially stepping out of the race. That's what is causing most of this correction, because who steps up? We don't even know. Kamala Harris? Is it Hillary Clinton? We just don't know, and what those policies would look like compared to Biden or compared to Trump. I think one of the reasons we've seen not as much political volatility up until now is because Biden's in the White House right now. Trump was in the White House last presidency. We kind of already know what to expect from both of them, and they very well televise, their plans going ahead. And I know some people have said, well, if Biden drops out, doesn't that raise Trump's odds of winning, in which the markets have been pricing that in, and that's part of the reason why markets have accelerated higher in the past couple of weeks. And no, not exactly, because if you replace Biden with a more fit, healthy, able individual, then maybe that takes some of the vote from Trump. Again, that's the market's perspective here. That's not my personal opinion. So I think it would actually lower the odds of a Trump win. And then on the other hand, you just have uncertainty, because what would this individual's policies look like? What would, for example, the corporate tax rate be under a Harris or Clinton presidency? We just don't know those things. And when there is uncertainty, that tends to lead to downside. Now, on the other hand, we have heard from some companies that have reported earnings, and it's been okay. It's been a bit of a mixed bag across the board, whether you look at airlines or the credit card companies, or if you look at TSMC or Netflix. I would say there's been more positives than negatives, but also expectations were super high. So as you get deeper into earnings season, next week specifically, and then the big week is the week after that, you're also going to get Jerome Powell that week. There's going to be a lot of things and a lot of moving parts happening in the next couple of weeks. And there's a lot of uncertainty. There just is. And with expectations this high for earnings, I think you are set up for a larger correction in the near term. And take a listen to this clip from CNBC and what Joe Terranova just said about this potential correction.
That takes us to our talk of the tape. So is this just a midsummer squall to wash away some excesses, refresh the bull market, or is a more threatening change in the market weather underway? Here to weigh the evidence are Joe Terranova of Virtus Investment Partners, a CNBC contributor, as well as BMO strategist Brian Belsky, and Alicia Levine, BNY Wealth Head of Investment Strategy. Welcome to you all. And Joe, extended periods of calm markets, often followed by a little bit of action, a little bit of turbulence. We have that here what's the message you read in what we've been dealing with?
Well, listen, you've done a great job all year talking about how Q3 could be a little bit bumpy. And it seems as though as we move into the earnings season, that's exactly what we're going to be getting right now. For the viewers, for investors out there, long-term investors, this is a tough environment right now because you have so many conflicting signals on a daily basis. It looks like we're getting this rotation within the market. Early this morning, it appeared as though that would continue. NASDAQ came under pressure. We had small caps lifting, but we've reversed that now intraday. And now for the first time, really in the last couple of weeks, you have a universal sell-off, a broad-based sell-off. You have small caps down. You have the NASDAQ down. You have the momentum factor down. A lot of the leaders that I've talked about on halftime, I own some of them. Goldman Sachs, JP Morgan, they're down significantly. Eli Lilly down as well. So
yeah, Chipotle's down like 5%
I think
again.
The picture that tells it all, if we could pull it up, is the VIX. Because you've got the VIX spiking up to 16. I know that doesn't sound high, but it's certainly a lot higher than it's been over the last 3 months. It's its highest level since April. We were above 21 in April, and we probably have the blossoming of a much-needed correction.
You know, Alicia, it's maybe just a little bit of a reminder to investors that a broader market, or one that's not kind of anchored by a handful of huge stocks, is not necessarily in the near term a more stable one or a more predictable one. But how do you think investors should be reacting to it, if at all?
So I see this as the healthy correction in a broader uptrend. I mean, as you said, we're coming into seasonal weakness. August and September sort of never failed to disappoint on the index level, and we're heading right into it after an epic climb the first half of the year. So that makes sense to us. What looked like rotation into small caps, it can continue, but ultimately, I think if you go forward structurally, the large caps are going to take over here simply because there's not enough market cap in the small caps to absorb the total rotation out of the large caps. If you just look at the top 10 stocks of the S&P, they're 5.5 times the market cap of the Russell, and the S&P itself is 15 times the market cap of the Russell. So it's a little bit like putting an elephant through a needle, which is what we saw. We saw 3 and 4% moves in a short period of time. That has to be digested. It's very healthy. An average year has a 12% drawdown on the index level for the S&P. We barely had 6% in April, and I think we're probably due for another 5% here.
You know, Brian, the big versus small equation and that bit of rotation, or at least just a little bit of a comeback from those extreme relative performance metrics, is only one way of viewing what's going on, right? It's also kind of a growth into value. It's the very top of the S&P into some of the rest, things like financials doing better here. So how do you read that, and what should we extrapolate, if anything, from the relative moves in the last week or so?
Well, thanks for having us, Mike. We would say that what's happening is very normal. We would say that this is part of a very broad and big picture normalization process, believe it or not. What's happening in the market, we said 8 months ago in print that the average correction during the second year of a bull market, which we've been talking about now for 2 years, within a 25-year secular bull market, which we've been talking about since 2009, is 9.4%. As Alicia said, we only had 5.5%. That's not enough. And obviously, on a near-term basis, we were overheated. Now, I do believe that it's very normal to get broader participation. We are entering a golden age of stock picking where you're going to need to own a lot of everything. Our theme for 2024 was everybody love everybody, meaning you got to own a little bit of everything, and now it's starting to come into fruition. So value was massively oversold on a technical basis, so a small mid-cap. But it's not about just technicals and price, Mike. This is about fundamentals. Now, starting with small mid-cap, we're talking about earnings discernment, cash flow, balance sheet, strength, the strongest in my 35-year career. You have a scarcity proposal in small mid-cap too, especially given the fact there's no banking deals and nobody's buying small mid-cap over the last few years. And then lastly on value, more of a GARPy value we think makes more sense, but we do think everybody's going to go up together once we go through this very normal correction, and it's happening right now.
Now, I think actually the last sentence there from the individual at BMO was very powerful also. He said after this correction where you see everything kind of decline, you're going to see everything rally back. And I think that is probably what we're looking at here. Now, keep in mind with politics, you normally see that correction around October during an election year. I think that is getting pulled forward to now. So instead of the October correction, you're seeing the July, likely August correction. But I want to be very clear on this. This is a bull market, and this will only be a correction of, let's say, 7 to 14%, 15% or so, just a ballpark, as long as the economy stays good, as long as the labor market does not break and Wall Street does not start to use more of that R word. But yes, long story short, I do think if we get a larger correction, 7 to 14, 15%, that can be negative in the near term for Tesla. And so far, you're only down about 3%. The 50-day moving average on the S&P is going to be the next big level. That would be a drawdown of about 4.8%, and that would be $10 lower on the SPY, down to 538. The 100-day moving average is that next level. That's down about 7.4%. I think that's more of a baseline kind of assumption for this correction. That would put the SPY back to about 525. And then that 200-day moving average is where if we get a disappointment on earnings season, maybe some more weakening in the economy, that's where we could head to. And that is about 491 on the SPY. And that would be a full 13% from top to potential bottom. Okay, now that that is out of the way, keep in mind, again, throughout all of this, there is that downside biased, meaning we are most likely to continue to fall from here. We are going to have Tesla earnings on July 23rd. That is next week on Tuesday. Now, for Tesla earnings, believe it or not, given the run-up in Tesla stock, the actual expectations for EPS, they're not great. Negative about 30% year over year. I think there's room for an upside surprise there. If you take a look at revenue, revenue is expected to be only up about 1% year over year to about 25.09 billion. I think there's room for an upside surprise there. Margins are actually expected to fall from about 17%, auto gross margins excluding regulatory credits, down to about 15%. So even though you've seen Tesla stock move higher in recent weeks, the actual numbers for earnings are not expected to be great, which I think you can see an upside surprise across the board there. And judging off of what we've seen over the past week, Tesla stock going from 271 down to where we are now at about 240, assuming we roughly hold this level heading into Tuesday, I actually think you're probably going to get a rally upon Tesla earnings. Now, the biggest question at this point is, do we get these new models that are unveiled to us? If we get the new models unveiled to us, what they look like, some of their specs perhaps, and pricing, then Wall Street's going to have to start modeling what these new models could do for Tesla's margins, for Tesla's, consumer reach, for Tesla's deliveries. And that likely means upside revisions to Tesla estimates for 2025, but mostly for 2026. So that could be a big help to Tesla. I don't know if we're going to get that unveiled on Tesla earnings. That's the upshot here. That's where you get likely a 10% plus upside move upon Tesla earnings. And just to ballpark it here, a 10% move higher would put Tesla stock back to about 264, but it wouldn't surprise me if that did spark a larger rally for Tesla, even into the 300s. So I actually feel pretty good about Tesla heading into Tesla earnings, considering you've fallen the last week or so. You're better priced for, I wouldn't say a disappointment, but I think you're better priced for not much new developments. And if that's the case, I would expect Tesla up or down about $10. Really not a big deal. Not much to actually happen. Okay, now forget all of this. If you are someone that is just long-term oriented in Tesla, you don't care about this earnings, which I don't think you should, but if if you just absolutely don't care about this earnings, you don't care about next earnings, you don't care about a potential correction or crash in our markets, you're just long-term in Tesla stock, or whether you're just someone that is a long-term investor in Tesla, or you're like me that trades this market as well. This is some of the most exciting stuff that you are going to hear anywhere else. And I think believe it or not, it's the most logical thing that you are going to hear for probably a long time with Tesla stock. Now, I'm sure you're familiar with the AI craze that has been happening in our markets within the last 12 months or so. I mean, you have to be familiar with this at this point. I don't think AI is a bubble, and I kind of want to start with that. I don't think AI is a bubble in the sense of it will revolutionize the world. It will. It's going to take more time than I think the markets expect, but it will be a big deal. And I don't think it's a bubble to that regard. Now, I'll just say it like this. Tesla stock could 5x by the end of next year when the markets start to focus on the real world companies that are applying this AI. Now, I've been looking for real world applicators of AI for months because I see this coming. The attention will turn from GPU providers, server rack providers, Dell, AMD, Intel, NVIDIA, to these real world AI providers. Investors will want to be positioned in companies that are actually doing something with this AI. Now, you can get into the specifics of this, like how much of potential revenue is going to be AI comprised. And Tesla is the only company that I can really find that is 100% benefiting from real world AI. But Tesla is by far the biggest company I can find that is doing something to such a large degree with AI. For an example, if you look at companies like even OpenAI for that matter, that Microsoft owns a large portion of, are they really changing the world with their AI? Are large language models really that impactful? Now, yes, you could say they're great, they have their purpose, of course. But are they creating self-driving cars? Are they like doing anything of serious, meaningful value? No. Enterprise software has its role as well. There's a company that I really like for this that I've been researching into for a little while now. It's called Elastic NV. And they're an interesting company as well. But there is no bigger problem to solve, especially with AI, than self-driving cars. And we now know it's only a matter of time before this happens. So when this attention shifts from GPU providers to the question, who is providing real-world AI? The only real viable company on that list is Tesla. Now, yes, there's other big tech names, and Apple can integrate, large language models and maybe sell more iPhones, whatever. That's crumbs compared to what Tesla is doing. You will see a level of hype and attention in Tesla, for better or for worse, than you have ever seen before. This will trump, no pun intended, everything else that you have seen as far as momentum probably ever before. NVIDIA, you think that's hyped up? Just wait until the markets actually realize that Tesla is solving full self-driving and is actually using this AI to make a difference. Now, Tesla's robotaxi event will be vitally important for that. None of this really matters if Tesla does not give us an estimated start date for robotaxis. Now, preferably in my scenario, Tesla comes out, they show us the robotaxi. It better not be a two-seater, okay? It better be a 4-seater at least. That's number one. But Tesla comes out, they give us a 4-seater robotaxi. I swear to God, if it's a 2-seater, man, I'm going to be very disappointed. Not the end of the world, but just please, if you're listening to this, Elon, make it a 4-seater, at least. Okay, make a couple different variants, a 4-seater and an 8-seater, right? So some kind of like larger vehicle would be great, because if you're leaving a wedding or something with a bunch of people, 2-seater is really not going to work for a robotaxi. Doesn't matter too much. But in my perfect scenario, you get a 4-seater robotaxi vehicle. You get Tesla that says, hey, we plan to launch robotaxis in 10 or 20 cities. Perhaps they list off those cities, give us a list, by the second half of 2025. That can be by June, or that could be by December. But as long as Tesla gives us those kind of guidelines, then I think the attention really starts to crank up on Tesla for robotaxis. Because at that point, from a, I guess, numbers perspective, if you're an analyst on Wall Street, you can start to model some pretty insane numbers for the robotaxi. Think about it like Domino's that's looking to, open hundreds of stores a year. What if Tesla can start to open up the robotaxi to hundreds of cities a year on a pure numbers basis? We're not going to get into all the numbers here. That becomes very impactful for Tesla. And in the not so distant future, AI revenue could be a large portion of Tesla's business, let alone the energy business, let alone the car business, let alone everything else that Tesla has going on. Now, believe it or not, if you look at NVIDIA as well, NVIDIA used to trade at much higher multiples than where it trades today. The multiple has compressed since the growth has picked up. And that's usually what happens. So what happens is you get a lot of hype. The stock does very well in question and gets a very high multiple. And then it grows into that multiple. So Tesla's multiple today, you would think is high, but it could go much higher. Back in 2020, Tesla was trading at a 1,200 times P multiple. 1,200 times P multiple. Because of the prospects of the robotaxi. Now, it took a lot longer, did not materialize as fast as a lot of people thought. But you could be looking at a P multiple in the hundreds for Tesla. And Wall Street will just say, Tesla's going to grow into that multiple. So I think from the numbers perspective, yes, if you try to look at Tesla during this NVIDIA AI moment that Tesla will see from really now until 2025, I think really, if we want to put a time frame on this, from October of this year through the end of 2025, it's not going to make a whole lot of sense, right? Because Wall Street's going to say Tesla trading at 80 times, forward, or 500 times forward multiple is expensive relative to other stocks trading at a 30 times. But it's the growth that's going to be massive for Tesla. And I think outright, just the hype is going to be huge. Again, for better or for worse. And I think you're going to see a lot more reallocation into Tesla. Wall Street, that has been underweight Tesla for a long time, is going to be almost forced to get back in because of this hype and attention around Tesla's AI prospects. Like, none of this rally, like 5% of this rally, has been AI based that we have seen recently. I think you're going to get closer to about 90% of Tesla's rally over the next 12 months, 18 months, be AI based. And I think Tesla, in a best case scenario, could probably reach $1,000 per share. That would be roughly about a 5x from here in just the next 12 to 18 months. That would put Tesla's valuation at about $3.5 trillion, which, sounds like a lot, and it is a lot, and I don't think it's sustainable at those levels. But I think you can make a case for it. with robotaxis, especially if robotaxis are simultaneously launching in China. Now, I think a much more reasonable base case is, let's say, $700 per share. But I think during a momentum short covering kind of rally, and shorts are going to get blown up, some shorts are not going to survive, some shorts are going to go bankrupt, in my personal opinion, based on this move, if they're not early enough to cover on those positions. I think you can easily start to justify a $2.5 trillion market cap, which a $2 trillion market cap would put Tesla at about $625 per share. So, I mean, these are big gains that potentially we're looking at. And I mean, Wall Street's not going to tell you that. But I think it's something with a reasonably high degree of certainty will happen. I mean, how can it not? If we're this excited over GPU providers, but we're not excited about self-driving cars, this market really does not work. The stock market does not work. It's broken at that point. And the profitability levels with robotaxis should be upwards of 50% over time after, their fleet gets built out and the actual software allows people to turn their cars into self-driving cars. And really, I could go on and on probably for 2 hours going over hypotheticals here. But long story short, markets will start to realize the long-term potential in robotaxis and AI. And if you're a fund that is looking to invest in AI, there's no better place to invest than Tesla. And that's not even a topic of conversation at this point. And I think this means very, very large upside to Tesla stock. In a more base case scenario, 600 plus could be reasonable by the end of next year, as long as we avoid a recession. I should say that. If we go into a recession, there's going to be a bit of a speed bump along this journey, but I do think it will be an aha moment. Wow, Tesla is the biggest AI company in the world. And I think that's going to bring a flood of capital into Tesla. So these are just some of my thoughts around this. We can talk about this more down below in the comment section if you guys would like to. In the meantime, that's going to do it for this video. I don't want to make it too absurdly long. Hit the like button as well as subscribe to the channel. If you guys want to come join the trading community, check out that link down below in the description of this video. Most importantly, ladies and gentlemen, enjoy the rest of your day, and I will see you in the next one.